Good morning, everyone. Yes, thank you so much, Barbara. And I really join you and completely echo what you said about my dear friend Herbert. The fact that he's really taken these Africa investors and moved it way beyond where it was when he came on board. I really want to appreciate the work that you've done. And I hope that would all continue to support the Africa investors. Just reading the magazine makes you get a sense of optimism about the continent, don't you? I am delighted to recognize many of the faces that I had seen during last year's summit. Many of you have been with me at several events since the last Investment Climate Summit, helping in your own ways to market Africa, not as a poor continent with a big begging bowl, but as a destination, a credible one at that, for investment, and for projecting the continent as an investment proposition whose time has come. Those of you coming from the continent can answer this better than I can, but where can you possibly turn in Africa today without seeing some investor, either from the Far East or from Latin America or from the Arab world or from South Africa or from Nigeria? The short answer to that question is nowhere. They're all over the place. Investors from all over the world are beginning to tip each other and to say, if you're not in Africa, it's better be. You better be. That saves me a lot of the time I spend trying to use evidence of performance to persuade people that Africa has gone beyond aid and that Africa is a credible investment destination. The more that we have seen the firm interest beyond the inquiries. I was only this week, with President Kagame of Rwanda, and we were talking about the level of investors' interest that very small population Rwanda has been attracting. And why, you may ask? Because Rwanda has gone ahead to focus on itself as a magnet for investment. It has basically decided that trade and investment are important tools for development, and it has begun to walk the walk of aligning public policy with that determination for attracting investment. The droves of investors from various parts of the world that we see in Africa makes us say that surely something must be happening, even for the naysayers who still will not see Africa beyond current circumstances of the Horn of Africa tragedy. You may have heard the African proverb that says, when the music changes, so does the dance. The music changes and you continue to dance exactly the way you were dancing previously. Africans have a way of thinking that you don't know the rhythm. The investment music has changed in Africa. And for the firms coming in from China, Brazil, the Arab world, South Africa, Nigeria, they have caught up to the fact that they must move with a new dance. The question, therefore, is, why has some of the rest of the world not yet heard the change of music? Have investors who have long postponed, delayed, procrastinated about moving into Africa not understood that the old dance about Africa is actually becoming passé? The idea of Africa as the dark continent, as a land of misery, as the single-story region is no longer viable. Have you, as an investor currently operating in Africa, or as a prospective investor understood that Africa's time is now. At the World Bank, we know that Africa's investment music has changed. Our finance and private sector development has been on this journey for many decades. And anyone who works within that stream at the bank knows that it's a totally different conversation about the role of the private sector in Africa from where we used to be. We know that the 21st century Africa bears increasingly little resemblance to the 20th century version. Such is the spirit that underpins the speech that the president of the bank, Bob Zolik, gave in the course of this week when he invited the world to embrace the new normal by looking beyond aid to a world in which developing countries are no longer colonial dependencies, as he said in his speech, but rising global economic players attracting far more private capital than foreign aid. Currently, Africa's estimated $53 billion in private capital flows far exceeds foreign aid. In that new world, where good policy can be more important than financial flows, developing countries and regions, including Africa, are responsible stakeholders in the post-financial crisis world that can no longer just muddle through. Investors from China, Brazil, the Arab world, and South Africa, Nigeria, are among the first to have understood that in the new knowledge-based, global, interwoven, interdependent world, Africa is not just the future, Africa is the now. Unlike them, investors from richer continents and regions, such as Europe, North America, Southeast Asia, who for now have been more reticent about the change in music, have missed great opportunities that opened up in sectors like telecommunication, the banking, and the financial sector across Africa. What today's first generation of Chinese, Arab, Brazilian, South African, and Nigerian investors have found in Africa is little compared to what remains untapped. Africa is pregnant with business opportunities, and we have evidence that backs this. You know, what pleases me the most is that speaking about Africa's potentials is no longer that story of, you have to be helpful to Africa. No, it's really about you have to be helpful to your own business strategy by taking a stake in Africa. It is clear that the opportunities that Africa represents will go only to those countries that understand that mere opportunities are not persuasive enough. I had the pleasure of participating in an event hosted by Nigeria yesterday. And you know that I am from Nigeria. I was very glad to say to my compatriots that the era of talking of the potentials is over. Everybody knows about the potentials. It takes walking the walk in order to realize the potentials. At the World Bank, Africa remains a priority for us, not only because of the enormous potential, but because never in the past have the keys for unlocking long-known but yet unexploited opportunities been more accessible than at this time of technological advance that has shrunk the world into a global village. Africa, according to the 2010 Doing Business report, is among the most active regions in enacting reforms aimed at facilitating business startups, in registering property, and in protecting investors. Intra-regional trade and investment has risen sharply, fueled by new regional trade agreements, business regulatory harmonization, and more favorable tax treatment, helping to create new large regional markets. And yesterday, Hubert and myself were co-chairing a session with African bankers, and all through the thread of that conversation, regionalism and regionalization underpinned the idea that Africa needed to create larger markets in order to create the momentum and the scale of activities that would attract even more credible investments. Before dipping during the global financial crisis and rebounding since 2010 and fairly holding strong despite the looming global economic uncertainties, foreign direct investment to sub-Saharan Africa rose nearly ninefold from $10 billion in 2000 to $88 billion in 2008. For the year 2008 alone, FDI flows to the continent dwarfed FDI flows to India at $42 billion and just fell short of flows to China at $108 billion. The steady rise of FDI flows is a recognition that this is a time of unprecedented opportunity for transformation in Africa. The other reason that the dance must change is because we now live in a world where several new instruments have improved access to other sources of capital. According to a recent industry survey, 44% of global private equity investors now find Africa a very attractive region, up from just 21% only a year ago. And those investors with existing exposures are optimistic, with 30% of them telling the survey that they had plans to expand their Africa investments. Our estimates are that sub-Saharan Africa can potentially raise $1 to $3 billion only by reducing the costs of international migrant remittances. It can mobilize $5 to $10 billion by issuing diaspora bonds, and it can raise an additional $17 billion by securitizing future remittances and other future deliverables. Now, the smart heads in our finance and private sector development did not just cook up this number. This is based on evidence, tracking very credible data. Our investors from China, Arab world, Brazil, South Africa, Nigeria, and investors from other emerging economies are only few of the new sources of financing that could help build innovative public-private partnerships, as well as generate private-to-private win-win solutions. And it is a big if Africans remain in the driver's seat. Partners like us and foreign investors like you will help, but Africa's development is ultimately the primary responsibility of Africans. Part of the credibility African governments have today is that they embarked on very painful macroeconomic and structural reforms for a full decade and began to see the results. African countries will now need to consolidate those macroeconomic reforms and initiate immediately the second generation sectoral reforms that are urgently needed in order to pursue the basis of diversification, turning attention to the microeconomic reforms that would unlock opportunities further in a diversified African economy, means taking advantage, full advantage of agriculture and agribusiness, value addition, canning, food processing ventures, for example, in small manufacturing projects. In recent times, we've been involved with the chief economist of the bank, tracking the fact that in 5 years, some 80 million, if not 90 million, Japanese jobs will be available looking for where to nestle because of the creeping cost of wages in China. Now, when that opportunity is seen, How does an African country prepare for it? Prepare for it as an equal partner, not as a receiving destination purely. Because as a receiving destination, Africa could mortgage more than it gets. It's important that sectors like electricity, water, sanitation, health, irrigation, telephone, ICT, banking, transport, and tourism, which are great sources of growth that are yet untapped on the continent, be optimized in terms of positioning for Africa for the new investments. In an Africa where the early foreign and so-called non-traditional investors are beginning to thrive, one of the investments that we know will be urgently needed is policy entrepreneurs, of which Africa still has very little. That is why, for those of you in this audience today, policy entrepreneurship becomes something that you must take on for the continent. Africa needs the right policies, institutions, and the right quality of public investments in order to become attractive and to hold the attraction on a sustained basis. We need effective policy think tanks. We need robust civil society. We need independent media. And we need institutions that uphold the rule of law, promote good governance, and continue to lay the foundation for creating the millions of jobs that Africa needs. Every year, some 7 to 8 million African youths join the jobs market. Where will these jobs come from, if not from credible investments in Africa? More than oil, gas and mining deals, and the fast-growing telecommunications sector, Africa needs small and medium-sized enterprises, especially firms owned by youth and women. We're so delighted that this year, our World Development Report focuses on gender. Think equal, act equal. That's the word to unleashing the capacity of the women on the continent and elsewhere. In fact, a Bloomberg journalist referred to this population of women as the next emerging market. That's a very interesting concept. Africa cannot afford to narrowly focus on the billion-dollar oil and gas and mining deals to the neglect of the billions of dollars in brain power that rests with its diaspora. So the diaspora, in my mind, represent the real army of investors that Africa must first tap into. The African governments must make it easier and cheaper for to transfer remittances and capital to Africa, but also to reinvest and to repatriate profits if they are successfully to attract diaspora-led investment. It is when Africans themselves take a bet on their continent that investors globally will interpret this signal positively and consider the investment truly ripe for their own stake. The question that many investors come to a forum like this asking is, where exactly should one put their capital at this point and at this time? While my colleague Thierry Tanor can help answer those questions, informed by the work they do with investors and private sector on a daily basis, my 2 cents would be to state that I believe that the next set of opportunities in the booming telecom sector, after, of course, some $60 billion in that sector, will come from investments to step up 3Gs and 4G networks, expanding mobile telephony to rural areas, extending banking services beyond the 20 cents of households who currently have access, and accelerating the penetration of internet usage beyond the current 6% of Africans that have access. These needs are going to grow, not diminish, for the Nintendo, the Facebook, and Twitter generation of Africa, who are today's consumer and economic majority. All of the binding constraints that Africa currently faces in expanding economic productivity are just the one side of the same coin of opportunities, whereas some investors are still lacking of access to reliable and affordable energy by more than 550 million Africans as a constraint. Wanglu, Mohammed, Carlos, even Shaka Shaka see the opportunity that beacons in harnessing the 90% of untapped hydropower potentials of the continent, and are therefore the 41 billion in capital that would be needed to make this happen. No sector more than agriculture holds more promise. As you know, agriculture is Africa's biggest private sector, even today. It underpins the economies of most of Africa's economies, providing both livelihoods and sustenance for the people, accounting for 30% of GDP in the region, 60% of its employment, 40% of export earnings. Investors from the global north and rich countries can help, not by providing food to starving Africans, which in the case of the Horn of Africa is, of course, welcome, but also by simply ending the lavish and trade-distorting subsidies estimated by the FAO to total more than $360 billion a year to their farmers. Finally, I would like to stress the need for Africa to build regional financial markets. We talked a lot about it yesterday. And 4 areas of reform will be critical for the policymakers in our midst. First is the need to eliminate capital and exchange controls between African countries. Second is the need to adapt financial regulation to the realities of African countries, which is still dominated by the informal sector and where borrowers often lack capital. Third is the need to build strong, independent, and credible regulatory institutions. And fourth is the need to develop intra-regional payment systems. Some of these reforms would lift many of the risks investing in Africa currently dangles over the head of investors. We know, of course, that there are other risks in Africa. We cannot, we should not, and we definitely must not try to underestimate the risks or exaggerate the opportunities that beckon you in Africa. We believe that every investor should go into the continent with his or her eyes wide open. There is another African proverb that puts it very well. No one is prudent if they try to find out the force of a flood and raging river by stepping into it with both of their legs. Interesting. It is an advice, though, that is valid for all markets, not only for Africa, but because other regions as well, at a time like this, would need to thrive to attract foreign direct investment. It is clearly important for Africa to do more than the ordinary. In any investment you consider across Africa, you can count on the World Bank Group as a partner. My colleagues at the IFC and at the MIGA would be there to help you. What Africa is looking for, though, is not just any investment. Yes, the continent is wide open for business, but it is not open for just any business. Africa welcomes investors, whatever their regions, only if the investments they bring are sustainable, yield jobs for the poor, especially youth and women, contribute to poverty reduction and to the empowerment of African communities to take charge of their destinies. That's what I hear every time I travel across the continent from the citizens. They seek the business and investment of the kind that upholds their dignity and enables them to deliver on the promise of development. The continent is open to investments that recognize and live up to their corporate social responsibility. That focus on adding value and increasing productivity, and that exactly is what puts a price to promoting good governance and combating corruption. And only the Africans can do this. Thank you very much.
Doing business in Africa, you can't afford to be without Africa Investor.